on a monthly basis about a $1.3 billion hit for them. Whereas OPEC, that benefit is now at $60 oil, is benefit OPEC about 3.2 billion. So they're showing the sum game of actually, if we do a bit of a cut, then we will see some benefits of that. The question then is, are we going to see the flow on into the demand side to keep holding that up, or are we going to start to see that coming back down again? And that's going to be the key thing for the next OPEC meeting. The challenge, I think, on the money side is you're starting to even hear the UK banks talking around negative interest rates to try and push money into the market, to try and stimulate the economy and get people out there and the businesses doing things again. So my sort of this dichotomy between the two of lack of demand because people are sitting at home. Matt doesn't want to go running down Lakeside Road because he's not allowed to, because you'll get a fine. But the fact then is, the market wants to push and wants people to start buying and start consuming. And then it's when is that going to happen? Is that going to actually come through this year, or is it going to be next year? And we're just seeing this pandemic roll on. I was reading the oil market is like my training at the moment. I get a lot of time now to do a hell of a lot of training, but for what? There's no races. And the same thing with the oil market. It's getting a lot of activity, but there's nothing at the end of it. And when's something going to come there? When's that going to be that bright light?
You could get a call up for the Olympics now. You never know. There might be some dropouts.
In the pensioners squad.
Well, anyone will do. I mean, nonetheless, it's all an achievement. Matt, the reality, of course, is that inventories are falling all the time, and we are moving towards what's the treasure trove of the 5-year average that OPEC Plus has agreed to be their target, and acknowledge that they should get there by the second quarter. What happens then? How much of a holy grail is that?
Well, that's a good point. I mean, yes, global stocks are drawing. That is an encouraging sign. It's obviously where like you said, it's the holy grail. It's the point that they want to get to, and they want a balanced market. Chris made a good point. How much longer can the Saudis maintain their production curtailment? I mean, that was the real sort of spanner in the works, if you like. I mean, in a good way. The market, that gave it a 10 to 15% boost on flat price, and no one really saw that coming. That really took it from staying in the low 50s, now getting up to $60 a barrel. But it comes back down to how much higher the flat price need to get before you incentivize other producers coming back. And
I think really Prince Abdulaziz was the original Reddit just to squeeze the short players. He warned them all last year that be careful, I'm going to surprise you. And in that way, one would have to say he's got the market on the end of his reins, because he's been willing to surprise.
Yeah, I mean, look, he said ouching like hell, right? I mean, you certainly didn't want to be on the other side of that. But you look at what Mike said on Sunday in your chat with him on Sunday, there is this post-vaccine euphoria that's been taken over. And that's the world's biggest independent oil trader. And Gunvor said the same thing on Friday, that perhaps things are getting a little carried away. And you look at people who are in the press, it's the Wall Street funds, cheap money. They're allowed to invest in whatever they're allowed to invest in. It's detachment from a fundamental physical point of view compared to where the funds are piling into oil. It's so detached that it's become a little dangerous. But your point regarding stocks, look, we're coming into maintenance season now in some refineries. China, which were the real savior of the market last year, whether that was buying cheap oil to store it and make some money, or whether the demand has picked up domestically. You can argue that for a while. But Sinopec are taking down 10 refineries over the next few weeks. That's a 1.5 million barrel demand hit. And you wonder if that savior isn't there anymore, you wonder what kind of effect that will have on sentiment and where this supply goes if prices are so high and some supply comes back. So we're at a delicate position at the moment.
Adi, the world has clearly been, and if it wasn't notable before, I think it is pretty much pronounced now, as it's been declared on this show, so that makes it real, that the K recovery is now the letter of choice. And ultimately, I make that point because it depends which part of the K you're looking at to where you think this market is going to go. The financial markets are moving clearly with the upper end of the K. Everything's up. I'm buying Bitcoin with Tesla shares that are already in some cuckoo land stratosphere, and that's the upper end of the K where caviar and everything else is going on. The bottom end of the K, where I'm waiting for my $600 check to be bailed out by the government at zero interest rates, the real economy is where you would think oil is usually anchored, because that's where demand is. You can't have fantasy about the consumption of oil. It's either in your car or it's not. But which part of the K are we on, do you think, and which part will we go forward with?
Thanks, Sean. Yeah, there's the holy grail of the oil trading, isn't it? It's at the moment we are in a bit of a uncharted territory, because we have these massive expectations that things will get better because of the vaccines and so on. There's a pent-up demand. What are people going to do if they get a vaccine? Are they going to go on holidays like they've never done before? We haven't been here before. Essentially, it's been uncharted. From that perspective, also cheap money is extremely important. I mean, I was just looking this morning on the upper side of your K. I think MSCI Asian shares are at 13-year, sorry, it's the mainland China shares at 13-year peak. We are sort of in a sort of GameStop moment here. Have they stopped buying those shares and buying oil? I don't know. But at the same time, there's a huge amount of uncertainty. We are expecting a big increase in demand this year, at least 5 million barrels, more likely to be 6 million barrels. The key players, China is growing extremely well. They're building new stocks. They are going to, given the geopolitical uncertainties as well, I anticipate the country to be stocking a lot more oil as well. India, as I mentioned early on, is the one to watch as well. It's doing very, very well at the moment. So demand is not too bad at the moment, but there is a massive uncertainty. On the other hand, at the lower part of your K, ExxonMobil just announced closing their Australian refinery. So, and Europe is pretty much where Australia is in terms of refinery. Just watch Europe follow Australia, essentially. So on that demand side, there are some very bright moments, some very poor ones. Looking from Europe, things are not looking great at all. Margins are, EBOB, which is gasoline, European gasoline, is barely reaching $8 sometimes this summer. It's really, really poor. But Asia is looking great, and that's where we should be looking at, really, to get positive. And the macro picture at the moment, whether it's cuckoo land or not, but macro picture is looking extremely positive. Just look at all the shares, all the commodities and everything else is basically on an uptrend. So yes, I mean, there's a massive amount of uncertainty. I'm sorry, I haven't given you exactly what you wanted, but there is that K that's
certainly, there is no correct answer at this point in time. I think though, Chris, all said and done, you'd have to be a brave boy to say that for all the multiple reasons, this market continues to float upwards. Its natural resting posture is upwards and not flat or downwards, which is kind of a fundamental change from last year, until such time as something significant comes into play.
And that's typically what drives markets is news. What's the good news? What's the bad news? At the moment, we've got comfortable with COVID and the pandemic, so that's no longer influencing the market. There's a bit of positive sign on the sort of US-Iran discussions and how that may play out. Whether that turns into something, we don't know. I think what's the bad news? Where's the bad news going to come to bring it down? And that's why it just generally keeps floating up and floating up. I'm always the pessimist, and I think something's sitting around the corner. It's going to bite us soon. We'll see what happens with the turnaround season in China and what effect that might have.
On that point that that Matt made, Chris, vis-a-vis the refinery maintenance period, this is a year where there is a significant amount of increased refining new capacity coming on stream globally, about 3 million barrels a day. How does that play into the dynamics, do you think, going forward?
Well, it's got to push the older refineries out. We've had a lot of government support over many, many years trying to prop up refineries. So you saw Australia's attempt at the back end of last year to prop up its remaining refineries. Clearly, that didn't quite get over the line with the Exxon refinery, unfortunately, for Australia. And therefore, I think you will see a lot more either full closures or partial closures of refineries as they're trying to reduce their fixed costs. The new refineries, that means we're going to see hopefully more shipping because things have to be moved around the world more, because generally the newer refineries are being built in further locations away from Europe and America. So you'll see the Asian refineries pushing product into those traditional refining areas of Europe now.
Matt, the numbers out of yesterday, we had a few reports, API showing inventory decline on crude, but rising on gasoline. Any insights there? What the outlook for that?
Well, I mean, there have been some healthy signs in the last few weeks. You know, product stocks have drawn. That is supportive for the market. You could argue that was, you know, before Biden got sworn in, and your mate Trump was telling people what they can and can't do, allegedly, of course. I think now that
I want that T-shirt. Your mate Trump. It's a big good T-shirt.
One of those red caps, Sean. He was my mate.
He was my mate. Yeah. Last seen in Bird Dubai.
Yeah, exactly. Yeah, no, look, I made this point to you a couple of weeks ago. I think arguably Western Europe went through the same thing. You know, they got Christmas out of the way, got Brexit out of the way, got Trump out of the way. And then they said, right, okay, now we need to, you know, this new renewed lockdown. And I think that delayed reaction, we're now seeing that when it comes to product stocks and refining rates, because demand is stalling. You know, as Adi said, India has done exceptionally well, China, but again, this fracturing between east of Suez versus west of the Suez is never more profound. So it's all about an arbitrage play. You know, like Chris said, refineries in Europe, it's an aging system there. There's not a lot of investment in the refining systems at all in Europe. It's all coming in from China and from Asia. So the arb is changing, whereas products used to flow from Europe to Singapore or Asia, is now going back the other way. So, you know, it's such a fluid situation, and it's been accelerated by COVID and people being locked down in certain ways. And Asia has led the race. So it will be interesting to see what happens over the next few weeks.
I think, Adi, a lot of the sort of elevation of the markets and oil now as part of that is more about the clarity beyond the darkness, if you like, that, you know, this darkness, this confusion, this period we're in, at some point in 21 ends and the vaccine dawn arrives, and it's whether it's June or September is really in some ways semantics for the markets, but it's really over the horizon that the markets are looking at. And on that point, I wanted to get your view on at what point does the cutbacks in capex investment last year, which were massively in the hundreds of billions of dollars towards new oil supply, start to have an impact in the market, start to be seen, to be felt? Your sort of midterm outlook on that issue.
Yeah, Sean. Well, it's that's again another sort of the holy grail of the forecasting. The way we look at these balances is essentially we are, as been mentioned, I think Matt said early on, we're drawing stocks right now quite a lot. There are a lot of assumptions about OPEC plus. So far on the supply side, I think OPEC plus is doing extremely well. I think compliance has been over 100%. mainly thanks to some issues in terms of loadings, the problems in Nigeria and so on. That when you actually look at, we have some models that we work with, and essentially they're showing that as you move more towards the sort of summer, particularly end of this year, those balances are getting extremely positive. But again, that's based on a lot of assumption about COVID, that there's not another major wave like we've had end of last year. The assumptions that OPEC Plus is going to hold reasonably well with their monthly meetings. It's very difficult to tell these days. And as mentioned early on, the Saudis really took one for the team and surprised everyone. And all the shorts got pretty badly burnt with that 1 million barrel cut. So there are a lot of assumptions there, but it's certainly based on these assumptions, by the end of this year, we could see a very reasonably tight market. Moving then on to 2025, given the investments, there's a big question mark there. You saw the headline about Total talking about potential deficit of 10 million barrels. I think it's grossly exaggerated, and even they said that it's just a possibility rather than a sort of main scenario. But I think that's the other problem with shale. Shale is a big one. How we know the shale is very price responsive, but we don't really know how price responsive it is under these circumstances. There's a lot of talk about shale financing and so on. Personally, I'm actually very optimistic. I'm a lot more optimistic that EIA. I don't think we will see a drop in shale this year. I think we'll see a small increase simply because of the price scenarios that we're seeing right now. I mean,
it's a 1 and 1 is 2, you would think, on that point. Let's just give the room a chance to comment on this sort of survey question, which is pointing to the medium term on the back of the Total story. When will this start to be felt in the oil price? Ultimately, concern about a shortfall in supply, which seems hard to get your head around right now when there's about 10 million barrels of available supply sitting on the sidelines. But nonetheless, when will this start to be felt in the oil price? This year, 2021, next year, 2022, or 2023 plus? So take your views on that before we go around the table. Chris, any other aspects you think looking at impacting the oil markets? We have a few sort of watchful eye continuously on the US-China relationship. There's growing militarization in the South China Sea, issues around Myanmar, where they spill over. Any other things to watch this week, do you think, for the direction of the oil markets?
One that I'm watching, which was mentioned briefly in your session yesterday, which was, is this Trump impeachment a sideshow, or is it something real? And I think it's a sideshow if he's not found guilty. If he's found guilty, I think that's going to be divisive for the US and polarizing, and that could have long-term ramifications. So that's one that I'm watching a bit closely. The other one is COVID. It's always the topic at the moment. You've got a lot of the South Africa mentioning they're looking at wave 4 even because they've got problems with some of the vaccination treatments, so they're reassessing that. So I'm just keeping an eye on a few little things like that can affect market. Just coming back to something Matt said around the refineries and we were discussing earlier. If you look at who owns the European refineries, they're all those countries we mentioned, the big ones that have said they got targets of being neutral in the near future, and they've got huge ESG commitments to achieve. So therefore, I think they've now got, between COVID and also ESG, they've got the reasons to now start to look at how they're going to move away from that refining capacity.
Matt, good, interesting question in the chat room about price expectation.
You know, I'm not very good at this, Sean.
That.
I'm not very good at this.
Yeah, well, I mean, that's irrelevant, for none of us are. You don't have to be good at it to give it a lash, you know. The idea that, I mean, this normalization of inventories, I think, is quite interesting, with the forecasted expectation of demand recovery at around 6 million barrels a day by most sensible people, seem to be including Addy, so we'll take it as given that that's the recovery this year. So normal inventories and 6 million barrel a day recovery, that would seem like Omar's comment earlier in the week of $80 oil not being too mad.
Yeah, I mean, it's a good point, because if like I said earlier, it depends on what Saudi do, and we'll never get to the point we were last year, which was, you know, the catastrophic negative oil a few days that we had was down to the Russian-Saudi fallout, and it was ill-timed, and it was just a combination that ended up in this perfect storm where, you know, I fell off my chair many times for the wrong reasons. But if we see a return to normality, whatever that is, what do we even know? We're just dealing with
on inventories, it's the 5-year average, and possibly even further declines after that into the second half of the year.
Yeah, then it depends how you want to translate those numbers. Like I said, the understanding the market has between what Wall Street care about and what a physical trader care about are so detached that it's a very difficult one to opine on. Do I think Omar is right? 80? Yeah, possibly, absolutely. But do I think we'll get down to 40? No, I don't. That's the thing. I think there's a lot more upside than there is downside at the moment, and it's clear that the Saudis are willing to put and do everything they can, and whenever they would need to do it, they will ensure that they'll put a floor under prices. So, you know, again, there comes a point where we all drive our cars, and we were happy when dollar was at $30 a barrel, and it's fairly cheap. Now, we work in a regulated market here, but if you're like Addy and you're in the UK, you dread going to a petrol station when crude oil's at $60, $70 a barrel, because you will feel that effect. And it's had a lot of effects on people's livelihoods in the UK, especially furloughed workers. It's those who are economically able to fill up their car. So you will see some end user demand destruction the higher that flat price gets.
And in Asia, you would think as well. Hence, the weak dollar is probably key to easing the pain of that. Let's get the survey result and give Addy the last word this morning. So 2023 plus after is really the answer there, i.e. not an issue. Addy, your outlook for the rest of the week and what might be moving the markets?
As I said, I'm on leave, so I really missed a little bit updated Brent situation that I'm going to start looking at today. We're all saying that, okay, the front end of the market is on the sort of lower side of that K. I'm not so sure. There seems to be extremely a good buying and good strength at the front end of the North Sea market. So there must be reason for that, especially given that very poor margins and poor outlook. So I'll be looking into that. I'll be looking into continued arbitrage into Asia and Chinese buying. I just want to see whether this pre-Chinese New Year buying, it's seasonal. It's always big. It's always a big demand boost. Whether it's going to continue afterwards, even though for the next couple of weeks I think it's going to be rather quiet. So I'll be looking at these telltales at the front end of the market just to see how far the fundamentals are really divorced from the actual flat price. My expectation is that they're probably not as far as it's very often admitted.
Okay, well, let's leave it there and call it a wrap. If you're looking for a quick update, Addy, you do better than listen to Chris Bake's interview, which is just about to be posted now on the WhatsApp group, where he gives his outlook on all of these issues. Which are sort of on the money, I would think. Generally, Chris is always quite sober and sort of points, I think, in the right direction. But that's going to be up now for your consumption. So, Addy, thank you. Enjoy Bosnia. Hopefully, it's nice and snowy there, and it's a beautiful place, obviously. Matt, thank you for your insights, and Chris. Get well soon. We're thinking of you. There's worse places to be dealing with COVID than Palm Island, so we won't feel too sorry for you. But nonetheless, Take it easy, and we look forward to seeing you soon. All the best, everybody. Have a good week. Take care.
Cheers, Sean.
Bye.